Hello guys. Um, we try to continue our lessons about how to control risk, and today we have subject is can you eliminate risk? This is the dream of traders. It means you trade and you don't lose. I'm not saying it is a stupid idea, but I say that it doesn't work in the real market. When you buy a stock, whatever is this stock, whatever you are sure about this stock, there is a risk of losing money. If someone tells you that I have strategies to do trading without losing money, I'm not saying he's a big liar. I say to you that he doesn't trade at all. He doesn't know what he's talking about. Okay? Because I give you a simple example. Last year, when we have the pre-exit news, when Great Britain has left Europe, who will expect that tomorrow we'll have all like Dow Jones? It goes down with 500 points. Who will expect that? Okay. So you can say people we can predict that or not, but understand that this thing about news you can't control. You can't. News can happen to the company itself. For example, the stock is going good, the company is good, and then one time there is an announcement and a bad news about this company. Whatever is bad news, and you will see that maybe people they short this stock and you will lose money. So some news are unpredictable. You can't predict this news. Some you can predict, which are the earning news, because you know where they are, but you don't know if the news are good or bad. Okay, but you don't know that they are good or bad. But there are some news that comes to the company, okay, that you don't know. Just company announces and you see the stock is going down and you lose the trade. Okay, so understand this thing that you can't eliminate risk. Some people, what they do, one of my students, he say, oh, I have read that you can buy a stock and then you buy a put option. I say, okay, are you going to be into the opposite directions? The market has always, each day, in each stock, either it goes up or it goes down. Okay? It should be one of the two. Sometimes it stays at the same price. It's exceptional. But the stock, either it will go up or it will go down. Okay? So if you go long, it means you buy the stock, you think the stock is going up, and then you get scared, you put an option. It means you are in both directions. And if there is a fluctuation, you will lose both. You lose here, then you lose from the other thing. This is a stupid idea to be in both directions. Now, some people, they told me, we know that hedge funds, mutual funds, they buy puts, they buy calls, they buy puts. When the market is going down, they buy more puts. I'm telling you that those managers, they manage other people's money. It's not their money. Okay? Because you can't be in the both different positions or directions of the market. Because the market either it goes up or it goes down. If you are up and you are down, it means you are just playing a stupid game with the market. Okay? If it goes down, you will make a little money from option. Little money, because if you have a big position like 20,000 or 50,000 and you go to options, you buy puts. But what if the few days the stock will go up again? You will lose these options money that you gain, and you will be waiting for the stock until it goes up again. So don't be taking stupid ideas from other people, and they ask you, oh, if you go long you can buy a put and you don't lose. This is a stupid idea. You want to make a trick to the market. If it is true, all the people will do it and make money, but they will never make money. You will stay where you are and you lose money. This is if you don't believe, you try to do it and you will see by yourself. Okay, if I tell you, can you go to the north and then you go to the south at the same time? You can't. The market is working like this: either north, either south. It doesn't stagnate in one point. That's why you see the stocks moving, always moving, up or down. Okay, always moving. They don't stop. Especially during the day, it means from 9:30 to 4 o'clock. After that, sometimes they stop moving. Why? Because there is no trader activity. The traders, they don't come after 4 o'clock or before the market opens, and they trade a lot. So most of the stocks they don't move, but some stocks they move when there is news or there is something like that. Okay, so those people who have the idea not to lose money, here is the problem. You come to do business and you know that there is a risk of losing money, and you don't want to lose money. How come this will be working for you? If you are scared to lose, don't do trading, don't do investing. Okay, do another business that you are comfortable with, because trading stocks as a business, there is a risk of losing money each time you buy a stock. There is a risk. So just this idea, you try to put this idea in your head, and you should accept the risk. But you should control it. Yes, this is very good. You should control the risk, because you can control the risk, but with the techniques that we have spoken about, you can control the risk, but you can't eliminate the risk at all. You eliminate it. You say, or you find some guru online, they say to you, oh, okay, I have a strategy, I made a strategy, you will never make money. You will never lose money. You are always making money. This is stupid, okay? That's why we have always winners and losers in the trades. Any trader, even the best trader in the world, he has losers, he has winners. There is no one who is all winners. Okay? It will be impossible in the market to predict tomorrow what will happen and you are right each time. If you are right each time, it means you know the future. And there is no one who knows the future. There is a funny thing. An Indian, someone from India, an Indian guy, he told me that they have a guru, he knows 95% or 100%, he knows what will happen tomorrow. I say if he knows everything, himself, he will be a billionaire in a few days. But you see his situation, you will find that he is poor and he is begging people for food. And he predicts the future. This is like stupid thing. And people, they still believe in prestigitation. Okay, they believe in. There are some people they trade because of the weather or because of this the stars or the sun or the wind, or I don't know, or they trade only in Fridays, or they trade in summer, they don't trade in winter. It's stupid ideas that the people have put in books, because these ideas, the people, how do they get these ideas? It is from books. I have read before books when they say, oh, trade on Friday, don't trade on Monday. You should invest in September, don't invest in summer. Do this, do this, do this, do this. Okay? These are stupid ideas, because the people, they go online, they see the chart, the Dow Jones, for example, and they begin to see which time is going up, which time is going down, and they make conclusions, which is false, because each year is different. That's why some people have always problems understanding the market. Okay? Because they think if last year some stocks have done good, this year they will do good. But it's not true for all of them. It can for some of these stocks, but not all of them. They go up because last year they go up. That's why some people they do strategies about this. Okay, they do strategies and they publish books and they because they don't trade themselves, they don't invest. They ask people to do this, but they don't do it because they don't care. For them is to selling the book is which is a bestseller or someone who is known. He's known, so he will be making money, millions of dollars, and he will not risk anything. Yes, those people that don't risk anything because they are not in the market. But you and I and everybody else, we are in the market. We have risk. What you should do? You should control the risk. You can't eliminate it, and this is, I repeat it many times. So if you are a beginner, you should train yourself to control your risk. Take this idea from your head that you can eliminate the risk, or someone else will tell you how to eliminate risk, and you become a profitable trader without having risk. This is stupid. And if you follow these people, there are online scammers like this. They don't trade, and they have ideas, and they say do this and do this and do this, and when you do it, you lose money, and then you discover after a few years that it's not true. Okay, so try to always accept the risk. For example, if you buy a stock at $20, you put a stop loss at $19. Let's say the next day the stock goes from $20, it goes to $19, and you hit your stop loss. So you lose $100 if you buy 100 shares. Now you should accept that, and you continue to buy another stock. Don't stop on this. Okay, don't stop on this. You should continue making your own trades. Okay, now why is that? You should accept the loss because you can do nothing. Can you push the stock up out of your stop loss? No, you can't do that. So in general, what I'm saying to you is that you should accept the risk, and you can never eliminate it. But what you should do, you should control the risk. Okay, so thank you very much for watching this video. Please subscribe or share the video, and thank you very much.